Hello, and thank you for joining us today. My name is Timothy Lee, and I'm a research analyst at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on gold development and production today. We will hear from Kevin Bullock, President and CEO of NexGold. During today's webinar, he will provide an overview and outlook, and then we will take questions. You can type your questions into the chat box at any time, and we will get to as many as we can. Before we kick things off, first we need to discuss some fine print. During this NexGold webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the NexGold corporate presentation, and that can be found on the company's website, nexgold.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. And please see our most recent research located on the Red Cloud website for specific disclosures pertaining to NexGold. So we have NexGold presenting today. The company has 2 advanced projects with near-term production potential in Canada, the Goliath Gold Complex in northwestern Ontario and the Goldboro Gold Project in Nova Scotia. With these projects, the company has the goal of becoming the next mid-tier gold miner. And with that, I now turn it over to Kevin to update our audience on the company.
Thank you very much, Tim. Appreciate that. Happy to be here. And hopefully, as I go through this presentation, I can get people as excited about NexGold as I am. As Tim said, cautionary statements. I'll leave these to be read on your own time, and move on to the presentation. NexGold actually is a company that is a result of a merger between 2 companies, Signal Gold and NexGold, to form something that's quite unique in Canada and on the markets. We have 2 advanced projects, both in first worlds, that at today's price of gold are very significant in value, approaching the $1 billion NAV each project. So over $2 billion net asset value on both projects. The combination also brought a high level of leadership and governance into the company from the 2 executive teams, including people that have built, financed, and operated mines in the past. And it created a lot of benefits and synergies in market potential with an improved capital market position at over $100 million market cap now with the 2 companies combined. We've got, as I said, 2 projects that could reach up to over 200,000 ounces a year in potential for throughput for over a 10-year mine life at this point in time. And our plan is to have a pipeline of projects to continue that, to become a mid-tier producer where we have a pipeline of projects. We will never build 2 at once, but we will roll from one to the next. The 2 that we have in front of us at the moment are Goliath in northwestern Ontario, the Goliath Gold Complex, and Goldboro in eastern Canada, in Nova Scotia. Very similar profile of throughput and costs. Goldboro being one of the highest grade undeveloped open pits on the east coast of Canada, and Goliath being very well positioned with infrastructure being on the main Trans-Canada Highway, power running through the property, and about 3 million ounces of gold in each deposit. So combined 6 million ounces, over 6 million ounces of resource, and over 2 million ounces of reserve in both projects. So quite a large company for a small market cap of its size. The executive management are seasoned people who have done this before. My history has been with various companies such as Volta Resources that was sold to B2 Gold. We took a shell company from its inception through the purchase of several assets and turned it into a company called Kirkland Lake Gold, which has since been acquired. I had moved to Africa and run ICYMI Gold Corporation when it was a private company, and we took it public in the mid-90s. And I see NexGold as one of those situations where this has a very, very strategic growth path that'll happen quickly in this gold price environment. Jeremy Wyeth, as the COO, has had many years involved in building mines and capital construction. And Oren Baranowski, as our CFO, over 25 years of raising capital for projects, has raised over $1 billion for various projects in the industry. So quite well prepared. The board of directors, our chairman is Jim Gowans, who is very well known in the industry, and other directors who have been in the industry quite a long time and add value to our company going forward. Capital structure, we have 143 million shares outstanding, quite small in today's world as far as shares issued and outstanding, and over 100 million market cap with coverage from Red Cloud, Paradigm, and Cormark Securities. We have several large investors, one of them being a strategic investor in Frank Justra, a billionaire philanthropist that's been involved in many mining companies that have been quite successful. Extract Capital, Sprott, Tech, and NexGold Management owns a considerable position as well. A good institutional holding at 22.5%. Debt that's been renegotiated down to about $12 million US, and our cash position is sitting at about $20 million. Two of the next permitted mines in Canada. I think it's very important to note the progress of these development assets in that they are partially permitted, both of them, and we're working towards full permitting of both mines. We will choose which one to build first within the next several months, and we will go with that while we get the other one fully permitted for the next step once the first one's built. At the Goliath Gold Complex, this is in a greenstone belt, series of greenstone belts in an area where there is significant potential, lots of large deposits, world-class infrastructure and talent. We already have our federal environmental approval for the project and are working through the IBA process with First Nations, working through the other permitting, and we're also carrying out a full feasibility study that will be ready in the first half of this year as well for the Goliath Gold Complex. As you can see here, over 3 million ounces of resources and over 1 million ounces of reserve. This is 100% owned, easy access. As I said, the federal EA in hand. The PFS showed robust numbers at 2150 gold. At today's prices, that shoots up to numbers that are off the chart. There is a feasibility study being carried out right now on this project. For the pre-fees, it showed a 336 million NPV after tax at 1750 gold. We are now at much over that, over $1,000 higher than that, and the NPV is through the roof as well as the IRR. 13-year mine life, about 100,000 ounces a year with over about 109,000 in the first 9 years. We are looking for projects that are under 400 million capex to build, so a series in the pipeline of these that a junior could raise money to build. So 335 million is the initial capital. Great gold recoveries at 93%, and some very reasonable lowest quartile costs per ounce and all-in cost per ounce. In the pre-feasibility study, it showed, as I said, a production level of around 100,000 ounces a year with good costs. Life of mine totals, as you can see on the right-hand side of the slide, very good costs, situated in a great jurisdiction with a lot of good infrastructure around already. This is a 65-kilometer long belt that's held by the company. So just the Goliath, Goldland, and Miller are just 3 deposits within a multitude of exploration targets that we have. We have rail, road, power going through the property, which eliminates the high cost of capital for some projects that are remote. The production profile, as I said, producing about 1.1 million ounces of gold, a little over that, over a 13-year period, with some great costs. So we transitioned from Goliath to Miller and Goldland, and underground after the open pits, at the same time as the open pits will be developed as well. The Goldboro Gold Project, which is in eastern Canada and Nova Scotia, this is a very high-grade open pit at over 2 grams per ton for the open pit material. This does have lots of underground potential, but that hasn't been put into the feasibility studies yet because it's still at a inferred resource phase. That will be part of the plan once we're mining there, is to drill the underground. This is in a great location. Previous producer from the late 1800s, early 1900s. We already have the environmental approval. We have a first of its kind agreement with the Mi'kmaq, the First Nations of Nova Scotia, which is signed, first of its kind. We have our mineral lease. We have our Crown land lease, and we are working our way through Schedule 2 amendment and the fisheries offsetting, which have been through consultation already and been approved by the government to move forward to getting those permits. So very well advanced in the permitting process. We're currently carrying out an updated feasibility study on this project to update it to today's costs and also today's price of gold. That should be done by the end of this year. The feasibility study, which needs to be updated, showed similar results to the Goliath, over 320 million net present value at $1,600 gold. Of course, gold is now approaching much higher levels than that, approaching 3,000. So, and the IRR of 25%. It's an 11-year mine life, 100,000 ounces a year, under the 300 million mark that we want to be, under the 400 million. So at 300 million capex, great recoveries at 96%, and the low end of the lowest quartile of costs, which are being reworked, but again, the lowest quartile of costs in the mining industry for the open pit. Again, the feasibility study showing about 100,000 ounces a year on average. Again, at today's price of gold, this would be over $1 billion net asset value at a 5% discount. There's a lot of potential at Goldboro as well on strike. In this particular map, you can see the west end of the planned west pit, and then the geophysical signature continuing on from there. We've done some limited drilling, showing that this trend continues with some very high grades up in the 100 grams per ton in some cases, but more importantly, multiple intersections showing a similar style of mineralization to what's in the feasibility study. So there's a lot of growth potential here on strike and regionally. One of the properties that isn't a focus of ours is the Niblack. This is a polymetallic property, very high grade in Alaska, and this is something that is not core to us at the moment, but also a property that adds value to the company. When we look at our comparable peers, at $2,000 gold, we are in a very low multiple, down along with a lot of others that are starting to move. But as we tick the boxes and move towards fully permitted and construction ready, I think we'll move to the left of these two maps or two charts, showing a much higher PNAV valuation and market cap because of it. And I think we'll move towards the left hand of these things over the next year as we move these forward. Probably two of the most advanced projects in Canada as far as permitting is concerned. So this is, with the combination, creates a company that has a combined market cap of over $100 million. This reflects the scale and enhanced capabilities of the merged entity. We have experienced teams who have done this before and executed on these strategies before. The project portfolio has been increased, and some fantastic relationships with First Nations, both at Goliath and at Goldboro, where we've completed and signed the mutual benefits agreement with the Mi'kmaq. We have a strong financial position. We carried out a financing with the merger, and a lot of growth and value creation with complementary assets and expertise, targeting operational synergies and streamlined management processes. Our market trading liquidity has increased since the merger because the market cap has increased, and there's an enhanced investor interest with this increase, and therefore access to capital. We're committed to sustainability and innovation. We are on the cutting edge of environmental stewardships with what we're doing at our projects, and we continue to optimize look at technologies to optimize our production and reduce the environmental impact. The exploration initiatives, we're carrying out some very advanced exploration projects. We have 3 drills turning on Goldboro, doing infill drilling to advance and de-risk the reserve and to advance the the updated feasibility study there. And at Goliath, we have a drill turning to look at the potential for resource expansion and resource and reserve expansion there. So a lot of information over the next few months as far as drilling and assay results, as well as further permitting work and negotiations in the IBA in the Goliath Gold Complex. So I'll turn it back over to Tim and see if there are any questions that I can try and answer on this.
Great. Thank you, Kevin, for the very informative presentation. As Kevin mentioned, we'll now start the Q&A portion of the webinar. A reminder to everyone on the line that you can type your questions into the chat box. And we already do have a few questions. I guess first, looking at, we had a few questions about CapEx. So interested in latest CapEx estimates and what may have changed. Obviously, we've been in an environment where there's been some cost inflation. We've seen that with a lot of projects. What cost category do you see as increasing more versus previous studies?
Yeah, I mean, basically it's everything. So we've had significant CapEx growth in the last few years for mining projects. Our feasibility study was done in 2021 for Goldboro, so we are updating that. We do not have the new numbers yet. But I would say, salaries, for instance, cost of employees have increased. The cost of steel increased quite a bit, but then rolled over, but not backwards. So that's been going up. We estimate probably a 15 to 20% increase from the CapEx from before over the last 2 to 3 years. Some things have gone down. Fuel obviously has gone up and come down a bit again. Power, we're getting the ability to possibly be helped with the power, with Nova Scotia Power and with the power line going through Ontario. So, I think that we'll see some cost increase, but that'll be, I think, outweighed by the difference in the price of gold that we'll use in the new feasibility, so that the deltas and the margins will still be there and still be quite strong.
Okay, great. Following up on that, we did have a few questions about gold prices. Might be a little bit of forward-looking statements in here, but obviously you won't know yet. You're working on the feasibility study. We did have a question about what gold prices would you plan to use for the feasibility study. Obviously it's a bit of a moving target these days with the strong gold price.
It's a tough one, Tim. So you obviously don't want to use the current price because that's you're not sure if that's sustainable at the moment. I mean, I look around the world at the things that make gold move, and I think gold's going to be strong for a while. I think what you got to do is you got to use the industry averages or the consensus. And if we were to choose that today, it's around the $2,150, $2,200 mark US that we would use. When we decide to plug in the gold price, when the feasibility is nearing the end, that may change a bit, but I wouldn't expect it to change that much.
Great. And think about metals here. Obviously, Niblack's a bit different, but that's a bit on the back burner, polymetallic project. But do either of your primary projects have any other metals that you get byproduct credits from?
Yeah, so the Goliath Gold project has some silver that'll have some byproduct credits. Not a vast amount, but an amount that helps. Goldboro's unique. There is no other metal whatsoever associated with the gold deposit, so it's just simply the gold.
Great. And I have a question here on the financing side, and sometimes this would be covered by confidentiality agreements, but have you been approached by any majors to participate with financing or project development for your projects?
I think all projects that are that are advancing and showing signs of being permitted would warrant attention. I think that the mid-tiers and majors are looking for opportunities. I can't answer the question directly, but I think that projects that are advancing and have the light at the end of the tunnel for being finally permitted and IBAs in place would get looked at by certain mid-tiers and certain majors.
Sure. We did have, circling back on the gold price, we did have a couple of questions relating to sensitivity analysis. Did you have an idea from previous studies about any sensitivity analysis looking at where these would be valued at current gold prices?
So back when we did our feasibility study for the Goldboro deposit, we put our top number on the sensitivity analysis at about $2,200 or $2,300 gold, thinking, boy, if it ever got there, that would be nice. Now that's mid-range now. So we didn't carry it out at anything higher than I believe 2,150. A quick look at it for both projects at today's price of gold, at spot price, they'd be over $1 billion each, NPV at 5% discount. Now that's assuming that gold stays here or goes higher, which you wouldn't use in your feasibility study, but that's the type of sensitivity this has. I'm not saying gold won't go there. I'm saying you can't use it in your feasibility study, but these things really are cash cows at these types of prices.
Great. And looking further here on project financing, what kind of factors are you considering? What project finance options are you considering? And one question was, what percentage of the project capital cost could be debt financed?
So the projects themselves, again, they're quite similar. So when I talk about a project, it could be either or. They both warrant the ability to have about anywhere between 2/3 and 70% debt. They're justified to be able to do that based on the cash flow numbers that would come out of it. They can actually warrant that type of debt financing.
Great. We did have one question that came in here. Obviously, look at exchange rate, and as there's a bigger gap between U.S. and Canadian dollar here. The question was, if the NPV is $1 billion per project, is that U.S. dollars or Canadian dollars?
That's Canadian dollars.
Canadian dollars. And, it raises an interesting point that, with the exchange rate the way it is, projects in Canada look pretty good because, the costs are lower versus your revenues that would be the gold price always measured in U.S. dollars.
Yeah, I think there's a significant advantage to being Canadian mining in Canada. We have to see what the tariffs do to things and all the all the talk back and forth that's going on what that does on things we need to import for capex, etc. But I think overall, being in Canada with a Canadian operation right now is just everything on our side.
Great. Now, circling back, you had mentioned some on the permitting, but can you speak to the permitting risk for each project on a federal and provincial level, and would Ontario elections affect permitting in your view?
So we we don't think that the elections are going to affect the permitting process for us in Ontario. We already have our federal EA, which is the environmental assessment. So that's been done already and received. And that's the permit that kind of says, yes, this project can continue. Now you need to get your provincial permits, and that's what we're working on now. We don't think an election would change anything. As far as Goldboro goes in Nova Scotia, we have our provincial EA because it's under 5,000 tons a day. So we have that in place. We've also recently received and carried out our full consultation on the only two federal permits we need, which is fisheries offsetting and Schedule 2 amendment. We've been through the process and the consultation with no red flags, and therefore we've finished that consultation, and that goes to a sitting whereby the Schedule 2 is amendment and the fisheries offsetting is accepted over the next 3 to 6 months. We've received our Crown land lease and our mineral lease for the project. So the only thing really remaining that isn't on its way is the industrial approval, which gives you permission to shovels in the ground. And that one requires every other permit to be in place, which I just mentioned, those ones that are about to be in place. All the purchases of private land that aren't Crown land for your infrastructure, and various other small permits. So we expect to have that within the next 6 to 12 months.
Okay, great. And yeah, we did have one kind of, ideally, when would, if everything fell in place with the permitting, when would each project potentially be construction ready?
So they're both looking like the end of next year as a possibility. And with a few more months and a bit more data for both, we can decide which one goes first and really concentrate on that one.
Okay, great. And obviously that would be one major factor, but we did have a question about what are you weighing as far as the priorities to choose which project to advance first, because obviously managing both at the same time may be a bit too much.
Yeah, we would never build two at once, so we will choose one. And the things that we look at for that is they're both very similar in cash flow analysis. And I think they'll remain that way, even though costs have gone up. They've gone up for both. Gold's gone up for both. It's about permitting timelines. So when we have a better eye on that, on some of the permits on both projects, and the feasibility update and as far as the Goliath Gold Complex goes, compared to the updated feasibility at Goldboro. And that's just a timing thing when they're ready. So the feasibility for Goliath is scheduled for the first half of this year. The update for Goldboro is after some infill drilling to de-risk the current reserve and feed into the updated feasibility, which will be ready hopefully by the end of third quarter. So, you may have one where the feasibility is done, but the permitting is not looking like it's coming as fast as we'd like, or you could have one where the feasibility is coming fast, but the infill drilling hasn't, the detail of the infill drilling and the new resource and the actual feasibility study is taking a little longer. So we'll know that line within the next few months and be able to make a decision.
Great. And obviously an important thing in any company, but obviously as you're approaching advancing development and approaching construction on projects is the personnel. Do you have the team in place to manage a project through construction, or what kind of strategic hires would you need to make to flesh out?
It's a good question. We've just made one, and that person starts, and you'll learn more about him as our VP of projects is starting soon for us, second half of this month, who will build an owner's team underneath him as we move forward on the specific project that we're talking about. Well-seasoned mine builder, and we're looking forward to that happening. We had built a team in the past, 14 engineers as part of an owner's team to move Goldboro forward, and then we're delayed on permits a little bit and had to disband that. So we've done it before, and we can do it again, and we get some top quality people interested in these projects being projects in Canada.
Great. And we did have one a little bit circling back on the permitting and so on. You did mention that you have agreements with the Mi'kmaq and with First Nations, but can you summarize a little bit on what agreements are in place, or what agreements would still need to be worked on the First Nation side?
So there's three communities of First Nations in Goliath that we need to have IBAs with, that we're currently in negotiations with, and that negotiation is going quite well. They want the projects; they just want them done properly with a focus on environment and on the relationships with the First Nations. So that's the Northwestern Ontario. In Nova Scotia, there's only one First Nations that you deal with. It's the Mi'kmaq of Nova Scotia, and we have signed the first of its kind mutual benefits agreement with them. So we are done with our relationship building, and we have an extremely good relationship with the Mi'kmaq of Nova Scotia, who actually come with us to certain government meetings to push the government to move forward quickly, which I've never seen in my career. They stand by us. They're our partners. They do have small ownership in the project based on signing the agreement, which was part of our commitment to them. And we will supply training, et cetera, for them to apply for the jobs in the area. And it's just been a fantastic relationship, and they've used us and said that we're the gold standard of how people should negotiate with the Mi'kmaq of Nova Scotia. So it's been fantastic there. That's done. We can focus on moving the project together as opposed to trying to get a deal.
Great. And one question always popular, how much cash do you have on hand, and how far will that get you with your current plans?
Yeah, so we have over $15 million on hand. As I said, we raised some money with the merger. That will get us to the point of another type of financing until project financing. We have the opportunity to do, whether it's raise money on the markets or whether it's the totally encumbered Goldboro project has the opportunity to use the value of the project being unencumbered to move forward to project financing. So we're good for a while, but we will need more money to get to the project finance level.
Great. Well, I guess one kind of wrap-up question, maybe to summarize, what are some key news items or catalysts, milestones that we might look forward to in the coming months?
Yes, I think you're going to see some more permitting news at both projects over the next coming months. You'll see a lot of a series of announcement of drill results from the 3 drills that are turning on the infill program at Goldboro, and the drill that's turning in Goliath for extensional drilling. I think you'll also see feasibility study results coming out of Goliath over the next few months, as well as an updated resource and updated feasibility study at Goldboro. So a lot of news coming out this year, and it's a transformational year for us, really.
Great. Lots to look forward to with NexGold. A lot on the go. Well, I'd like to thank Kevin Bullock for presenting today, and thank you everyone on the line for tuning in and for your questions. Please join us next Tuesday when Red Cloud's webinar series continues with PTX Metals presenting Tuesday, February 18th at 2 p.m. Eastern Time. Have a great rest of your day and happy investing.